Welcome to Ashtags, Practical Principles for Powerful People Passionate About Purpose. Hello, everyone, and welcome to Ashtags. I hope everyone is doing well today. And today we are really just here to talk about life insurance. Okay, it's so important. It's almost the end of Life Insurance Awareness Month. So, what we want to do is just go into the details of the types of life insurance and what your personal options are. I want to remind you about last week's episode. In fact, if you have not seen the So Good series in the final part of the So Good series, go to my hashtags YouTube playlist and check that out. In the last episode, we spoke from Mark 8, where we talked about the blind man who was touched by Jesus and could see men, but they were walking as trees. He did not have the clarity that he needed. He had to be very honest with Jesus. Jesus had to touch him again. He had to touch him another time, and then he was able to see clearly. Now, sometimes we see things, we understand things, but we don't understand them clearly, right? Not in a way that empowers us to make decisions, right? And so, what I want to do is just really get into the nitty gritty of the types of life insurance and what they are. And then, of course, as a life insurance agent, I do not manage your money, but I can help you manage the relationship between yourself and your financial institution of choice, should you choose to get a life insurance policy. All right, so let's get into this.
All right, guys, today we're going over the concept of covered. I'm here to talk to you about life insurance. I want to know personally that when the storms of life come, that I have some sort of coverage. The same way we insure our homes, we insure our cars. Why wouldn't we insure the most important asset that we have, or at least that we have on loan, which is our life? Okay, so let's get into this. Okay, let's start with the obligatory promotional post. I want to remind you that we have a resource available for you at Wise and Thriving, resources.wiseandthriving.com. That is a financial stewardship resource packet available to you for free. All right, so go and get that. Now, what are the types of life insurance? Very plainly, and what kind do you need? So there are two types of life insurance, right? There's temporary life insurance, and then there is permanent life insurance. What are the differences? So temporary life insurance provides coverage for a specific term. It could be 10 years, it could be 20 years, 30 years. So for that amount of time, you are covered under the policy. If the insured person dies during the term, a death benefit is paid to a beneficiary. So Jack has a policy on him, a life insurance policy. Jack passes away. The person that Jack has designated to receive the benefits receive those benefits. Once that term expires, that 10, 20, 30 years, the coverage ends. So no more benefits are paid unless it's renewed, right? For another 10 years, another 20 years, oftentimes at a different price, or converted into a permanent type of insurance. So what we're going to do is discuss the different types of temporary and permanent insurances. So concerning temporary insurance, you have the level term. So the death benefit remains the same throughout the term. So you have 10 years to be covered for $1 million. If anything happens to you within those 10 years, as long as its premiums are paid, you receive those benefits, right? You have the decreasing term. The death benefit decreases over time, often aligned with a decreasing financial obligation, like a mortgage. So you say, okay, I want to make sure that my house is paid off whether I'm dead or alive. I have $100,000 left to pay off. I'm going to get this $100,000. I'm going to get this policy for $100,000. But as I get closer to paying off that house, the benefit is going to decrease. So if I have $60,000 left to pay off the house, that benefit might decrease to $60,000. When it's $10,000 left on the house, there will be $10,000 of benefits. That's that type of policy, right? You have a convertible term policy. So it allows the policyholder to convert the term policy into a permanent policy without a medical exam before the term ends. So let's say you are 8 years into a 10-year policy and you decide now you want permanent insurance. That convertible policy can now be converted into a permanent policy without you having to do a doctor's medical exam. Okay. And then we have what we call the renewable term. It can be renewed at the end of the term, but premiums increase based on age. That is the downside of a term policy, because the ideal is that your income would also increase with age. Your ability to be self-insured would also increase with age, but we know that doesn't always happen, especially after retirement. So you don't want to be in a position where you're now being asked to pay higher premiums and you have less income. Okay. So with term policy, it is the most affordable type of life insurance, right? And if you need to start there, do that, okay? And then plan for upgrading, right? And then your coverage, I want you to just make a point that your coverage through your employer is a term policy and it ends with your employment unless you convert it, right? But I have a question for you. Do you plan to die at that job or not? Because if you don't plan to die at your job, you need personal protection. You need a private life insurance policy. Okay. Next, we're going to talk about permanent insurance. So, permanent insurance provides coverage for insured's entire lifetime, as long as premiums are paid. It's the difference between renting insurance and owning, or at least, paying a mortgage to own insurance in a way. Okay. It includes a cash value component that grows over time. And that cash value can be accessed while the policyholder is alive. So within the permanent type of insurance, there are some subcategories. So you have whole life insurance. So that offers lifelong coverage for fixed premiums. You pay us $99 for the rest of your life, and when you die, we pay you X amount of benefits. I'm making up that premium amount, but that's an example, right? It has guaranteed cash value that grows at a steady rate. Every time you are paying into that policy, you are not only paying the cost of insurance, some taxes and fees, but you're also growing a cash value, and that provides a guaranteed death benefit. No matter what, as long as premiums are paid, you're going to get that agreed upon death benefit. Now, the universal life insurance. It offers flexible premiums and death benefits. So you actually get to make conditions on the premiums. Maybe I'm going to pay until I'm 65 or until I'm 70, and then I want it to last until I expire, right? Cash value earns interest based on market rates or fixed rates set by the insurer. So when you set up your policy, you're going to decide, are you going to be investing the money in a variable kind of market or in an index type of market? You would then decide that or your money manager that you work with. Okay. And it allows policyholders to adjust the death benefit or premium payments over time. So you see this is much more flexible. If I need to change my premium amount, I can do that. If I need to adjust my death benefit, I can do that. You understand? Now, we want to talk about variable life insurance. This is a life insurance investment product. So it offers the potential for higher cash value growth by investing in sub-accounts similar to mutual funds, right? The death benefit and cash value can fluctuate based on the performance of the investments. That means you can make money on your cash value, and that also means that you can lose money on your cash value. That's the risk that comes with investing in the market, right? Now, You want to talk about the indexed universal life type of insurance. It has cash value growth and it's tied to a stock market index such as the S&P 500, offering potential for higher returns, right? And then you have a cap on gains and a floor to protect against losses. So let's say the S&P 500 does 16%, but your policy might have a 12% cap. That's a potential downside. But let's say that market goes to negative 15%. Your account, your policy will have a 0% floor. So it's not going to allow you to lose any money when the market goes down. All right. Now, lastly, we have the final expense insurance, also called burial insurance. It's a small whole life policy designed to cover end of life expenses such as funeral and burial costs. Okay. And I talked about how this is kind of like last resort. I got 5 different diseases, and I just want to make sure that my aunties and them can bury me if I pass away. You want to get that final expense insurance to save yourself some dignity, okay? When choosing life insurance, you just want to consider your goals, you want to consider your budget, and you want to consider the level of flexibility you want in your policy. Do you want to make sure that your rate is the same for the rest of your life? There's a policy for that. Do you want to not have to pay a premium after you retire? There's a policy for that. And I just want to stress that the sooner you can get started in choosing the type of policy you want and just kind of getting down that road of planning for the future, the better. And there's a whole episode coming up in a couple weeks dedicated to, estate and legacy planning. But for now, I just really want you to put your head to your life insurance options and think about what kind of move you want to make, right? I put my personal agent link in the description. And if you would like my help, I would love to help you. And we can figure out what kind of policy you need. All right. I love you guys. And I hope you got something out of this. I will see you next week. I want to just leave you. Oh, don't even let me sleep on this. Okay. ChatGPT went ahead and made us a chart. And I did not ask ChatGPT to make me a chart. And yet it did. And I want you to screenshot that because it's just a quick reference to what we just discussed. And you have some decision making to do, my friend. Okay. Don't scoot over that part. I need you to decide and take action. Okay. And I just want to leave you with this final verse from our friend Solomon in Ecclesiastes 7:12. It says, "For wisdom is a defense." We know that. As money is a defense. We know that. But the excellence of wisdom, but the excellence of knowledge is that wisdom gives life to those who have it. Wisdom is the application of knowledge. It's great to know a bunch of things. It's great to watch this episode 5 times, which I hope you do. However, if you're not acting on it, that's not wisdom. So here, let's be wise people. Let's be fruitful people. Let's be planning people, godly people. You understand? Let's do that. All right. I love you guys, and I will see you next week. Now, if you like what you heard here today, let's go ahead and make this relationship official. Go ahead and subscribe to the channel, and I will see you next week.